talk of what the markets are doing. We are holding decently well in this turbulent times. But, well, of course, let's put the spotlight on Asian Paints. That's the earning candidate. What's the way forward? Let's connect with Mr. Amit, who is the MD and CEO of the company. Hi, very good afternoon, and thank you so much for your time. Firstly, when I look to your numbers, the numbers look a little weaker what the market was anticipating. Help us understand what led to this decline. Even when I see your volumes, there has been a decline too, and below street estimate. What was the factors that played in this particular earnings?
So overall, when we look at the quarter, it was the demand conditions were weak, and overall, it was a little bit of a challenging environment in terms of what we have seen for the entire industry. In this, we logged in almost about a 1.8% volume growth, and the value growth was slightly negative in terms of what we saw, almost about 4.1% on a consolidated level in terms of what we have seen. So overall, we have seen that the urban centers have been very, very slow in terms of the overall demand. However, the projects business has done well from a point of perspective of B2B, and the industrial business has also done relatively well to that extent. So it's the decorative business which has been slow, especially in the urban centers in terms of what we see. As we go forward, what we are definitely seeing is that the rural towns, T3, T4 cities are doing relatively better, and they are expected to come up. We also have a prediction of a good monsoon, which is there overall to that extent. However, I think the overall demand conditions are not looking very, very optimistic. So we are cautiously optimistic in terms of the coming quarter, in terms of what is there. And we are aiming at going forward at something like a single-digit value growth in the coming quarter.
Thank you, Mr. Syngle. This is Kanishka also joining in. I would also like to understand from you, what's your outlook going forward into FY26, especially when it comes to your margin guidance? What are you expecting on that front?
So overall, if you look at even now, we are closer to our margin guidance, which we had given about of 18 to 20% in terms of overall PBDIT margins. If you look at from a 12-monthly point of view, we are within that margin range in terms of what we have indicated. Going forward, we will like to maintain our margin within the 18 to 20 range for our PBDIT margins for the FY26.
But Mr. Amit, a lot's been changing with respect to the competitive intensity as well, because we have seen some leaders entering into this particular space. Help us understand what kind of a pressure you are seeing with more competition getting in, and how do you see the macro challenges impacting the paint industry overall?
So overall, what we see is that, the demand conditions are relatively supposed to be better than what the year we have seen. Overall, as we go ahead, we see that the competitive intensity is going to remain. As an organization, we are committed to playing to our strengths. We are looking at amping our spends from a point of view of brand. We are looking at more innovation, more value propositions which come to the customer, and see that possibly looking at our servicing distribution strengths and seeing that we are able to kind of capture the customer's mind far more strongly in terms of the propositions which we offer. We've already kind of working on lot many new innovations which are coming, along with the fact that we are reinforcing the whole area of quality, which comes with warranty all across our products in a very big manner. So I think we will play to our strengths, look at guarding our share from the point of view of innovations and brand strength which we bring into the market.
All right, then that's how you're looking to navigate the competition intensity in the market. But sir, let me also ask you, when do you expect volume growth to return, to grow by double digit or even in high single digits? That is, what will be your volume and value growth expectation for the current fiscal, that is FY26?
Last year, the overall paint market was negative in terms of how we have seen the entire industry. As we also look at from the point of view of overall demand, industrial demand has been much better in terms of what we have seen. But the decorative demand has been much lower to that extent. So therefore, the industry growth from a point of view of a decorative business has been in the negative overall to that extent. Having said that, overall, given the way we have kind of performed, there would be smaller market share losses which would have happened largely to the existing players in the market to that extent in terms of what we see, because the newer players are still very, very small from the point of view of the overall business they are doing, as we see in the market. As far as profitability is concerned, we have ventured into a lot many areas of backward integration also. We have a white cement plant, which is kind of really going to be operational by the month of June. And we have another VAM-VAE plant, which is coming in the month of February, March of next year. So I think both these investments will give us a lot of muscle from a point of view of cost savings.
Well, we do note that how the competitive intensity and what strategies is Asian Paints adopting at this point in time, but the key to track is definitely the volumes. Though for now, in the quarter gone by, the volumes were almost 2% for Asian Paints. But help us understand that given all the factors that you just explained us, which will be at play, how should one see Asian Paints volume growing in the quarters ahead, especially what is the overall outlook for FY26?
So overall, when we look at the quarter, it was the demand conditions were weak, and overall it was a little bit of a challenging environment in terms of what we have seen for the entire industry. In this, we logged in almost about a 1.8% volume growth, and the value growth was slightly negative in terms of what we saw, almost about 4.1% on a consolidated level in terms of what we have seen. So overall, we have seen that the urban centers have been very, very slow in terms of the overall demand. However, the projects business has done well from a point of perspective of B2B, and the industrial business has also done relatively well to that extent. So it's the decorative business which has been slow, especially in the urban centers in terms of what we see. As we go forward, what we are definitely seeing is that the rural towns, T3, T4 cities are doing relatively better, and they are expected to come up. We also have a prediction of a good monsoon, which is there overall to that extent. However, I think the overall demand conditions are not looking very, very optimistic. So we are cautiously optimistic in terms of the coming quarter, in terms of what is there. And we are aiming at going forward at something like a single-digit value growth in the coming quarter.
Mr. Single, you earlier said that you're seeing some recovery in the rural segment, but I also want to understand, when do you expect the urban demand to pick up, and which segment will start picking up first?
Overall, as I said, the urban centers have been slower in terms of the pickup, and it is the rural centers which have been growing much better. We expect, as we kind of really go ahead, possibly it is, I think, in the second half of the year when the urban demand would pick up to that extent in terms of going forward. However, we expect that the demand should be a little better than what we have seen in the last 2 quarters overall from an urban point of view to that extent. However, we need to be cautious about all the geopolitical happenings which are there happening in the environment. And I think that will govern a lot of sentiment in terms of how demand kind of augurs for us as we look forward.
All right, but lastly, Mr. Amit, give us some sense that what is the growth capital that the company is willing to put for FY26? What are your capex plans?
So overall, we have already put in a lot of expenditure from a point of view of looking at backward integration, which I spoke of. There is a 3,000 crore investment with respect to our VAM-VAE facility, which is coming in the Dahej in Gujarat. We also have now the white cement plant, which is coming up. We've already ramped up our capacities all across the plants, and already I think this is a spend which is closer to about 5,000 to 6,000 crores in terms of what we have put in. Going forward, we are looking at our ninth plant, which will come in the next 5 years in terms of coming at Indore, which would be approximately a spend of about 2,000 crores in terms of what we will put in. And we will continue to look at spending in terms of looking at efficiencies in our existing plants, and there would be some amount of capital expenditure which will be spent in terms of automation and looking at ramping up efficiencies in our existing plants.
All right, then thank you so much, Mr. Single, for joining us after your